Hi, good morning. My name's Jamie Mordaunt, and I want to talk to you today about a little bit about asset allocation. Now, I've been in this industry for over 18 years, and I've seen so many funds come and go. Some make money, some don't make money. You know, it's part of the parcel. You've got to structure your portfolio in a way that you know you're going to gamble on a little bit. It's going to be 15% in there that you're going to take a bit of a risk with, and you've got another 40-50% of money you know it's going to make you 5, 6, 7% per annum. Now, one of my favourite funds that I've used for over a decade is a fund called Fundsmith, and this is by a guy called Terry Smith. Now, this guy is a genius. I was lucky to have a good chat with him a couple of years back, and the way that he sees the world, the way he sees the economy is just, it's breathtaking. He can pinpoint stuff out there that people just don't even see. In the 10 years that Fundsmith has been around, and I believe it's the anniversary right now actually, he's made over 440%. That's a great return. If you put a sort of 10-15% into your portfolio back 10 years ago, you'd be sitting on a nice lump sum of money right now. Why has Fundsmith been so successful? It's safe to say that Fundsmith Equity is one of the, if not the most popular investment funds out there in the whole world. It's often top of the best-selling lists and remains a firm favourite during the height of the coronavirus-induced uncertainty throughout the whole year. Everybody still loves it. Not a month has passed by during the last several years where Fundsmith Equity hasn't been the most purchased fund out there. There's got to be a good reason why. It's a massive fund. It's nearly $22 billion and makes it one of the biggest funds out there. Has Fundsmith grown too big though and outseen its success? We've seen in the past where funds have started off relatively small and the growth has been fantastic, but they have lost it over time because they've lost the essence of what they're doing. I don't think it has. I think there's so much more growth still to be had with Fundsmith. I mean, during the last decade, when active management has received so much criticism for the underperformance, Fundsmith Equity was rewarding investors nicely. I mean, 440%. You going to turn that down? Since its launch in 2010, the fund has made how much? Yep, 440%. Far ahead of the return of the MSCI World Index in the same period of time. So why would you go directly when you go to Fundsmith and double your money? Now, what does that mean for you? And that's the most important question. We all want to make sure that our pockets are lined. Now, an investor who backed the fund back then with $20,000, a lump sum, would now be holding around $109,000. That's not bad going, is it? Now, a lot of us put money away on a regular basis. Now, a person funneling £100 away each month over that same period of time would be sitting on $32,000. That's dollar cost averaging, which we spoke about in one of our other videos. Now, it's vital that you have options out there. I love Fundsmith, but I was chatting to Peter Seligman. He recommends the lesser known Guard Cap Global Equity Fund. This is managed by Michael Boyd and Giles Warren, who have worked together since 1997, and this is an excellent fund. He said they have honed the approach to being invested in concentrated portfolio of circa 20 to 25 stocks out there with an emphasis on quality, growth and value. They're their key figures that they want to go for. The result is a portfolio that's focused on the growth of companies that are relatively resilient to the economic environment and which is slightly more diversified across the sector than the Fundsmith one is. I personally still love Fundsmith, but this is an excellent fund to have a look at as well. Right guys, two other funds I'd like you to have a quick look at, just in case you didn't like those two, are Loomis Global Growth Equity Fund and Evenlow Global Income for Global Funds. These are two fantastic funds out there, not as good as the two I've chosen before, but you want to have a look at them. Now please like and subscribe here and we can make some more videos and hopefully we get your money invested and making some gains.